my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here's your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. A bullish thrusting pattern on Friday as the market reacted to the reaching of the lower time during the previous session, and that's currently at 103.65, of the January to May 2021 bearish Andrews pitchfork. This pitchfork has successfully run the bearish incentive here for a year now. Additionally, we also now have the December 2016 low at 103.49 nearby, as well as the January 2017 low at 103.38. We also have the market well in between the upper time, currently 105.67, and the middle time, currently 102.02, of the steeper and more recent mid-February to end of March bearish Andrews pitchfork. This upper time is helped and abetted by the falling short-moving average, currently at 105.60. It also leaves the last week of April and the first 2 weeks of May as a possible bearish halfway hesitation. I'll not place a target below, not just yet, but I will be studying the idea, especially if we close consecutively below the lower time. So far today, indecision as the market seemingly wishes to not just yet try the lower time, but also not just yet move up to the overhead congestion between 104.51 and the February and March lows from 2017 at 104.92. Cable, aka sterling against the US dollar. An immediate countering combined key reversal up and bullish engulfing pattern on Friday. Last Thursday's drop and close below the June 2020 low at 122.48 was not well received, and prices reacted back up on Friday as a result. However, prices only just managed to close up over the June 2020 low, as up above in the 123.22 to 123.37 area, we have a newly built congestion area on a closing basis from last week and the week before. Overall, the recent moves lower have been a continuation of moves down from the recent late February to mid-April descending triangle pattern. Initial target X in the 126.55 area had already been achieved, and the harder secondary target X1 in the 123.60 area was reached 2 Fridays ago. There is now a possible target X2 right on the 120 even area. This is a potential target for the mid-April to date action being a possible bearish halfway hesitation. So far today, a lower open, but then a spike up over the June 2020 low at 122.48, but failing as it approached the congestion overhead between 123.22 and 123.37. The subsequent dropping towards where it opened and looking like an indecisive spinning top right now. Euro sterling. A second bearish black crow on Friday and a small if suitable follow-on lower to the previous sessions, counter to the counter key reversal down. Prices slowed and eventually halted upon approach to the combined September 2021 to date downtrend, currently at 84.78, and the upper downtrend of the December 2021 to date huge but lopsided extended diamond pattern, currently also 84.78. The question is still out there as to whether this move up since the start of May is a true or false break higher out of the diamond pattern. Currently, for the smaller lopsided diamond pattern, we have a preliminary target X in the 86.80 area and a harder secondary target X1 in the 87.65 area. For the extended diamond pattern, we have a primary target X2 in the 87.15 area and a harder secondary target X3 in the 88 even area. We have already reached the upside target for the bullish halfway hesitation over late April at target X4 in the 85.77 area. There's one final pattern, and it is a big one I've spoken about now for countless days, weeks and months even. It is a large falling, very large falling wedge pattern, 84.85 to 80.97, which is still in operation but which had fallen into the shadow a little with the diamond patterns. This pattern has also been triggered and is also the most ambitious target on the upside, target X5 for this pattern is in the 88.65 area. That's a huge ask, but it seems to be the season to give huge asks right now. So far today, well, a lower open and a move down below the upper trend line of the extended diamond pattern, but only as far as the support at 84.70 before pulling back up and indeed making today look like a possible bullish engulfing pattern and even a key reversal up. Well, that's what it is right now. US dollar against the Indian rupee. A second consecutive indecisive pattern on Friday, this time an indecisive spinning top right at the height of the market, as it may not have made a new all-time high, but it still managed to just make a new all-time high close. Overall prices are still in between the lower time below, currently at 76.67, and the middle time above, currently 78.12, of the mid-January to early April bullish Andrews pitchfork. We still have overhead target X in the 78.30 area. This is the target for the possible whole of the 2022 action, being a possible bullish halfway hesitation. In between we have the middle time and the upper trend line, currently 78.13, of the late August to date ascending wedge pattern. So far today, a new all-time high open and a strong move higher into fresh territory of what looks right now like a bullish opening long white Mariposa. US dollar against the Brazilian real. A reactionary bearish black crow on Friday as the market decided it did not like staying over the falling medium moving average, currently at 512.13, and decided to close below it and at the bottom of the congestion area in a 505.73 to 510.87 area. Further below, we now have the combined support of the flatlining short medium moving average, currently at 490.07, and a 2021 low of 489.08, as well as the nearer 50% Fibonacci line of the October 2019 to May 2020 move at 496.58. Overall, the recent move higher seems to have peaked just ahead of the 50% Fibonacci line of the March 2021 to April 2022 move at 522.76, though failing to close below the congestion area 505.73 to 510.87 still leaves the door open for a possible attempt higher once more. Otherwise, well, I may be tempted to draw a bearish start of 2022 to date, bearish Andrews pitchfork, but that's to come. US dollar against the Mexican peso. Second bearish black crow on Friday and the lowest close for the week. The move up at the start of last week was, unsurprisingly, once again capped by the flatlining short medium moving average overhead, currently 20.2861, with a further slew of resistances above. These are, and they are in no particular order, the long moving average, currently 20.4356, the medium moving average, currently 20.3703, the neckline, currently 20.4831, of the September 2021 to March 2022 head and shoulders top, then the interesting 61.8% Fibonacci line of the July 2017 to April 2020 move at 20.6062, and finally the upper time, currently 20.4793, of the November 2021 to March 2022 bearish Andrews pitchfork. Additionally, we also have targets X2 in the 20.4960 area and X3 in the 20.6605 area. These are not resistances, but primary and secondary targets to late March to late April double bottom pattern. Target X2 for the primary target. The primary target was achieved 3 weeks ago, but target X3 may be becoming slowly out of reach. Meanwhile, from where we are now and stretching down below, down to the lows of April in the 1971.68 area, we have the previously mentioned double bottom formed from late March and through April. Inside this congestion, we have the odd-looking July 2021 based broken trend line, currently at 20.0521, which seems to be currently influential. So far today, a move up and away from the odd-looking broken July 2021 trend line, though not by much, and we're looking like an indecisive spinning top sitting on top of that at the moment. Thank you for listening. This short version broadcast gives you essential market patterns and consequences. Please be aware of the risk disclaimers posted with this broadcast. Copyright Tofpik and ADM Investor Services International Limited. And here comes the final bit.